Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, September 9th, 2016. A few days ago, I did an update on the long trade ideas, and I had promised to follow up with a update on the short trade ideas. There's quite a few. I'll update those that are relevant. We've had a few breakdown recently, trigger short entries. So and then one even stopped out. I made mention in the trading room the other day. They just clipped the stops on XOP. I think that one's headed down, but if, I have to stay with consistency. If any trade hits the final price target or the maximum suggested stop, it gets moved to the completed trade category. So I can always add it back. Um, and if I do that, I'll let you guys know. I do think it's going lower. But let's take a look at the active trade ideas. I'll go through these as quick as possible because we have quite a few. This is actually a setup, STZ. I've had it as a setup for a while on the site with an entry to be triggered below 149.25. Now that entry never triggered. So, an untriggered trade setup remains a setup, and I either at that point, if the chart doesn't look any good, I'll pull it off. In this case, if I decide to keep this one on, and I'll let you know, there'll be an update on the front page. The entry would be revised. You can see that we have this primary uptrend line that I'm watching that comes off the 2014 lows. But just below that, we have support at 162.12. If I have a trend line, in this case like this, with a pretty well-defined, as you can see, well-defined, these reactions here, a lot of reactions there, support. I give it the benefit of the doubt. I wouldn't short a trend line break. I would wait, since it's not too much farther below, to see that 162.12 level clearly give way. That would open the door, and I'll probably resequence these. I started to do this before the video, and I figured, you know what, I need to get this out there because the Qs have broken that 116 support level I've been watching for a while, so I'll get to that in a second. So that would be the first target. I may need to modify it because that's the actual support, 149.25, and I resequence these other targets. Let's look at. Okay, this is what I'm referring to here. This is the level of the trading range. I've harped on this. If you follow the site, you know what I'm talking about here. I've said we need to make a solid break, not a little intraday punch through, but a solid impulsive break above 118 or below 116. I've consistently maintained with the divergence and everything else that I favor a break below 116, and now that has happened. This is impulsive selling. See the volume bars? See the big red candles? This is exactly what I refer to when I say an impulsive breakdown, not these little intraday breaks that go down a few pennies and on low volume and snap back up. So there it is. The sell signal that I've been waiting for God knows how long now is finally triggered. Nothing is guaranteed in trading, but this is as good as it gets. Bollinger Bands have pinched. We've now broken that support, and I often say you tend to get these pretty big moves. So I'm doing this video now, and what I want to get out there is that I've said this for a while. Don't become complacent when the market gets in these sideways trading ranges. I know it's frustrating, whether you're long or short. And I know that, those of you who've been shorting or bearish are frustrated because there's been a lot more trades stopped out. Heck, if you've been long or short, you've had an increased run on your stops more than likely because of a sideways trading range. However, the biggest, most powerful moves come out of such periods of price compression. This is like a coiled spring. This is one of the tightest trading ranges we've had in years. And out of such tight trading ranges, I've talked about this a lot, tend to come very big impulsive moves. So, if you've been looking to short, don't wait for this market. Don't wait for 2-3 more days because this market can be down. Lock limit futures tonight, in the next day or two. I'm not saying it will be. I'm just saying it will probably continue to go back here. If you've missed this, if you're getting home watching this video and the market went any lower, the next objective entry, it's still objective in my opinion here. We're only at 115.45. A push back to 116. There's even a gap there above. You can even get back up to 116.50. So I know that would take us back in the range, but this market's just full of trickery and whipsaws and everything else. So let me just make it clear. Any short entry on the broad market, up to the 116.50 level looks objective. I wouldn't add if it gets much higher than that. And where to add going down. Well, with each tick down, the risk to reward sort of diminishes. You get away from the breakdown point. But with that being said, this is pretty well confirmed. And again, I'm looking for not a day trade here. I'm looking for a swing short on the market and a lot of these stocks, meaning that can last weeks, if not days. All right, let's get back to the charts. Try to do this quick because I don't want to digress, but I think that's important to tie in what's going on with the broad market with these short trade ideas. This is Broadcom, symbol AVGO. It's an active trade on the site. Just a beautiful chart. I don't know what else to say. I've mentioned this is one of my favorites in the trading room. I love the semiconductor sectors. We're short the semi ETFs. We're short some individual semis. This is one of them. It just shows how well the charts work, especially during corrective phases when the market's going down. You had this impulsive move down that confirmed the breakdown from this wedge. You paused here at S1 the other day. Yesterday we closed, hit it, bounced off it. For S1 means first support level, and then just a beautiful display of technical analysis. Today we broke down below the S1 level. Here, let's look at the 1 minute chart. That was it right here. It moved down very quickly and impulsively to completely come down to the S2 level and fill that in on just one candlestick so far, one daily candlestick. Market's still trading. Next support is S3. And S3 is a big one. That's the uptrend line. We have to jump back to a 2-day, 4-year chart, 2-day period. TC2000, for whatever reason, they haven't caught up with the times. You can only go back 2 years on a daily chart. So if you want to see 4 years, you have to go to a 2-day period. But that lets us see this trend line that I'm looking at here. This is what I refer to as a primary uptrend line. It defines the primary uptrend. In AVGO, we had a trend line here that broke. So I just wanted to show you where that generates off of back in there in the 2013 lows. And that'll be a big level. Now, I expect that level to go. Normally, I might cover there. However, based on the charts, my read on this and everything else, I plan to wait for a break. Now, the first target set not too far above that. That would trigger a longer-term sell signal. However, I can see the possibility. If we get there and it happens soon, we'll probably break down below and maybe come up to back test because prices will be pretty extended to the downside if and when we get there. So that'll be the first target. If you like to take quick profits, I mean, you can take profits at any of these support levels. That's why I list those for active traders that want to game the small, any bounces or take early profits. But as of now, I'll leave 149.16 as the first target, 140.29 as the second target, and I very likely may extend the final target, add a third target down here at this support level. It's all the way around 115. But I just have to see what happens here at the market going forward. And as always, if I extend that target, I'll do so before the current final target is hit. Otherwise, it would be hindsight to, if that target's hit, you've closed out your position. So that's what the targets are now, and let's state it otherwise. BRKB, I don't want to spend a lot of time on this. This is it's been on the site as forever and a day as an active short trade. We already hit the first target way back when, came close to the second target, and it actually, we hit this uptrend line here. I should probably highlight that a little better. I do think this one's headed lower, but it's sort of a dead money trade, and I'll be honest with you, I haven't checked in on this one for a while. It might have taken out the suggested stop. I don't know. I do think it's going lower. It has this bearish rising wedge pattern here. You can see the divergence. Really, that divergence comes from this point to this point here. But so I think it's going lower, and I'm not going to spend a lot of time on it, and I may just take that off just to keep the trade ideas manageable. You can't put too many names on there. Just becomes hard to follow. DLB, next one up. Dolby Labs, just nice clean looking chart. We shorted on the breakdown there. We had a back test. I believe if I pointed that out the other day, that back test, maybe somebody inquired. You had horizontal resistance here, which you still do, 50-60, and the back test. So this is just perfect technical analysis. Breakdown, back test, prices rolling over, and the divergence is confirmed. I don't see any reason why this one's not going to hit that target, but that's why we have stops. If I'm wrong, the stops will limit your loss. And as I always say, I'll list at the very least the suggested stop on a trade. I will usually calculate that based on the final target. If you're just a quick trader trying to game a shallow pullback and you only want to target one of the first two targets, then calculate, use a lower stop calculated on whatever risk to reward you. I like to use a 3-to-1 RR minimum. Sometimes I'll use a much better RR, but so you might want to use a different stop, but it looks good anyway. So let's go to the next one, which is dust GDX. I always use a chart of GDX when shorting. The target here was set on the 4-hour chart. I did an in-depth coverage on this, the metals and the miners, including GDX the other day, so I won't get into that. I had just mentioned, to make a long story short, here's a bearish rising wedge. That was just the first leg down, so this was a counter trend bounce, probably looking at least an ABC correction, at least. And if so, this begins our C leg down, and that'll probably take us to that 22.28 final target on GDX. But we fell just shy of the first target. I had it set a little aggressively. I had it set right on the actual support level that I was looking at. And anyways, we reversed just shy. But again, I already went over that one. All right, next one up would be Gush. This one has to be updated. They just took out. Gush had worked out very well because we had a lot of sideways chop in XOP. Gush is just the 3-time S&P oil and gas exploration and production ETF, and it worked out well. We hit the first target very quickly. I don't even have it listed here on this chart anymore, but just the other day they ran that stop of 38.20. 38.28, yeah, 36.28, and nope, 38.28, I'm sorry, my eyes were a little blurry there. So that one is technically stopped out. I made some comments in the trading room. There's at least one other trader short. I do think it's going lower. This so far has been a fake out. I'm referring to the breakout above that previous reaction high. That's where that level was set. That's why our stop was set there. So, Gush did well, at least up to the most part, because of the decay. This is perfect for a 3-time ETF being short because that decay works in your favor. So again, I'll remove this one as soon as possible, as soon as I post an update on the front page. But I did make mention in the trading room the other day. It's been stopped out and officially hit. And if you are short or interested in shorting it, I made a reply with some price targets on some downside price targets on XOP in the trading room as well. All right, next one up looks like HL, Hecla Mining, and looks good. We shorted the breakdown there. That was just the measured. This was just the measured target, the distance of the wedge. I already went over this one, I think, in video format. Had this bearish pennant pattern, never played out, broke to the upside, so I'll take that off now. But just like the miners, GDX, this is a first wave down, a little consolidation and bounce, and it looks like now it's on taking the next leg down. The second target's already been hit, so we've had some nice gains, but I haven't seen anything in the charts, anything remotely close to making me want to take this one off or close it out early. And I still think very much. In fact, there was at least one member on the site who bought some puts right here on that bounce back to the first target level. That resistance was at 630. That was a nice entry, and I added on some shares to my position there as well. So it's looks good so far. And you can see also the impulsive nature of the move down after it failed at that back test of that former support / now resistance level. So miners look good on the downside. MO, Philip Morris, I know I've received some feedback, and I talked about this, just like that STZ, the Stars Constellation Group. These are consumer defensive stocks. Who would have thought, with the economic indicators rolling over, the economy, possibly heading towards a contraction, this is usually where you want to buy these things. But I talked about this before in detail, that here's a P/E ratio. You can see here, this goes back 10 years. Altera, which is, that's the former, that was a spinoff from Philip Morris. So that's I believe this is the U.S. tobacco operations, if I'm not mistaken. And I think the PM, which is Philip Morris group. I think they took on the international stuff. Again, I'd have to look at that. It's been so long. I remember when the spinoff happened. We used to have PM. So anyways, that's MO, and you can see that it's like many of these consumer defensive stocks, they've never been so richly valued in their history, and that is because the Fed, I think it's almost criminal the way they force these fixed income buyers. Grandma, I used to work for a brokerage firm within a bank, and you have people come in, and these retirees, a lot of them want security and safety, and they were fine when their CDs were paying 6, 7, 8%, even okay when they went down to 4 or 5. But keeping it zero interest rate environment, you're forcing people, not just individuals, pension plans. Do you know what pension plans have to do to meet their unfunded liabilities? If they can't grow their money at the 8 to 10% historic returns that they used to get, which they can't anymore, especially doing it safely, they've taken money out of bonds because they're not paying anything, and they go into these stocks. So now you have a bubble in safe money, defensive issue, dividend paying stocks, where normally this is where market participants would be turning to those, especially if these economic indicators continue to roll over and tell us that we're heading into a recession. Where are you going to hide? You're going to hide in bonds? There's nowhere but up in interest rates to go, and you can't hide in defensive stocks. Same thing with utilities. So that's why I'm comfortable shorting what normally, and these are dividend paying stocks, but I think you'll overcome that dividend and then some. I mean, goodness, the trade's already, I don't know, it's not a huge gainer so far, but a lot of potential in this one. And again, this isn't a strap yourself in, hold on, it's not going to be a rocket trade like, some of these other things that we do in the energy sector or the semiconductors, which can drop really fast. More of a steady eddy, and I think it'll just gradually over the next few months, it could take months, to work down to this final target. But like I said, the charts confirm it, not just Philip Morris, just about everything in the consumer defensive sector looks poised to fall, and already has. I put up an update on XLP earlier today, and this is just a component of XLP. All right, enough on that one. NANO, Nanometrics, breakdown, backtest, and should reverse soon and hit that first target. It looks fine to me. The divergence was in place after the breakdown. It had this little backtest, but it seems to have rolled over for now, and I still like that one. I don't see any reason to revise the stops or cover that or anything else. NVIDIA, NVDA, that's one of the semiconductors that we're short, broke down, triggered an entry. It's dancing with this, I have this first support level S1 at 60.63. You can see all the reactions there. You have a gap, several reactions, and it's just barely, not fully starting to crack below that level, but it really hasn't impulsively taken it out. But if and when it does, and I fully expect it to, I should just, if you're considering entering this one, because it's really close to the entry point. It just recently triggered. You still have a gap right here. So the safe bet, you can wait for a break, that gap to be taken out. The bottom of that gap is around 60.07. So wait for a break below 60 to either add to a position, or if you're a little bit more conservative, don't like taking stocks at the top, powerful uptrend like this, you want a little more evidence, you'll probably see, my guess is it'll smash through there with a pretty impulsive red candlestick once that level goes, and then you'll know that one's probably lights out for NVIDIA. And that one has a lot of meat on the bone. First target's way down here. It's about a almost 15% drop, about a 20% drop to the second target. That's what I'm talking about. These semis, you have risk and return goes hand in hand. You have a higher gain potential, but then again, your loss will be higher if the trade goes against you. Price line, you know what? I haven't updated this one ever. I have to look at this one. I don't own this one in my account anymore. Haven't for a while. Long term, it looks to be rolling over. It's back testing. It's just a long, painful rollover in this one, like the market, really. It broke down this uptrend line, has been back testing it from below. This is a weekly chart here. We look at a daily chart, and I just don't see a lot. In fact, I don't see it. I do see negative divergence. I'll check it. If it hasn't hit the stop yet, I'll just leave it on there for now. Unless I get too many new short trade ideas and it becomes hard to track all these, I may just call this one in early, take it off. And if I do that, I always give notes. If I think it looks good, I'll let you know. Just because I pull it off as an official trade doesn't mean you have to close it out. If I think there's a reason to close it out, I'll certainly share that with you. semis, as I mentioned, you can short the individual semis or you can short the sector or both. SMH along with my preferred vehicle SOXL, which is a 3-time long semi. They're both shorts, and I don't know what else to say. This is just beautiful chart action. Broke down from the bearish rising wedge. It's rolled over. Now we're seeing impulsive selling kicking in. Their divergences are confirmed. This one appears to be headed lower, and I don't see any reason. There's a little bit of support right here. I would say a minor support level. There's also a gap down there. So probably a reaction in this area soon, but I still think this one looks good all the way down to my preferred target is T2 right now. It's 60.13. The actual support levels there a little below that, around 61.06. So did I do that right? If I have my line at 61.06, I might have meant to put that at 61.13. So be on the lookout. If I revise that on the site, because I usually set the targets above the actual level, so I might have typoed there. We also have that gap to fill, which is very likely as well. And the bottom of that gap is at 60.06. So let's see. No, I did that right. Okay, guys, I was highlighting the wrong line. They're close together and when I'm zoomed out. So that line is set at, let's see, 61.06 and 6. Oh, okay. I see what I did. I might have intended to put this first target just above the bottom of the gap there. But what I'm doing here, sorry for the confusion. There is support. The top of the gap is certainly support, and that is at 61.06. So I may also I may revise that second target and place it just above the gap. Again, it depends how the market and the sector looks at the time. But as of now, we'll leave those targets as is, and I should be a little more accurate. I should move that down there at the bottom of the gap. That's what kind of threw me. UEIC. Universal Electronics, it's flirted around this support level, broke it, got above it. Now we're back below it. Could probably move this support line down to right here because now we have a few reactions there. But it looks good. I mean, clean, bearish rising wedge with divergences. Once you see the 9 EMA, the signal line here cross below, make a solid cross below that 0 line. It shows us the trend is now probably bearish. I'm talking the primary trend, in which case that one could easily go down to any or all of these targets. So looks good for now. And last one, no, XOP I already covered. So that's it. That's it for the active trades. Before I wrap this up, let's see if I had any other short setups on the site that already triggered that I didn't cover today. No, I don't think so. Okay, we'll leave it there. We'll wrap it up there. If you have any questions, drop me a line in the trading room or by private message, and be on the lookout for additional trade ideas. I have a ever-growing watch list of both longs and shorts. So, for those of you bullish looking for a pullback, as I said recently in a lot of the market update videos, even a lot of the bullish traders were at least looking for a pullback, knowing that we've been quite extended. And I'll do my best to let you know, which I've already covered in market updates. I won't go there right now. It makes this video too long. But I'll give you levels that I think might be objective levels to enter longs, and those are usually the same levels that I might suggest to cover a short at. And I'll try to keep a steady flow of any long trade ideas that stand out. We'll certainly put those on the site for you guys. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.